They said it would happen slowly, and for years it did. But as of January 2026, slowly just turned into all at once. While retail investors are losing sleep over price candles and social media noise, the architects of the global financial system just flipped the switch. We are no longer in the pilot phase. We are in the mainstream supercycle from 20 billion in tokenized assets today to a staggering 490 billion forecast by the end of this year. That is a 20 times explosion happening in the shadows of the plumbing. Swift has confirmed it. Standard Chartered has launched it, and the DTCC is preparing to move quadrillions onto the ledger. If you are waiting for a Bitcoin signal to tell you the bull market is here, you're looking in the wrong place. The real wealth is moving onto utility networks like the XRP Ledger and Stellar, and it's moving faster than your exchange can refresh. I am the quiet analyst, BHW, and today I'm pulling back the curtain on the tokenization supercycle. And why the frustration you feel right now is the exact SmokeX screen the institutions are using to build the new world of finance without you. The noise is a distraction. The infrastructure is the reality. To understand where we are going, we have to look at how fast the ground is moving beneath our feet. The phrase of the year is slowly, then all at once. This comes from Securitize, the tokenization powerhouse backed by titans like BlackRock, CK, and Morgan Stanley. They aren't just predicting a cycle. They are declaring a tokenization supercycle. Look at these numbers from Bitwise. In 2020, tokenized real-world assets, RWAs, were virtually non-existent. By 2022, they hit a $1 billion market cap. Somehow it took another 2 years just to double to $2 billion in 2024. But then the friction vanished. Between January 2024 and January 2026, the market didn't just double, it 10x-ited. We are sitting at $20 billion right now. But here's where it gets staggering. Presto Research just released a report predicting that tokenization will hit $490 billion by the end of this year. Think about the magnitude of that statement. So we are talking about adding $470 billion in value to the blockchain in the next 11 months. How? It's not through retail buying meme coins. It's through US treasuries and credit instruments moving on-chain at institutional scale. Now, Wall Street giant Bernstein is reiterating a $150,000 Bitcoin price target based on this supercycle. But let's be intellectually honest here. So, is Bitcoin actually the home for tokenization? No. Bitcoin lacks the scalability, the low transaction costs, and the settlement speed required to move trillions in real time. If you are following the Bitcoin price as a proxy for the tokenization revolution, you are watching the wrong scoreboard. This value isn't going to store of value assets. It's flowing into the high-velocity utility networks. We are talking about the networks designed to be the plumbing of the new financial world. If the current growth rate continues, we aren't just looking at $490 billion. By the end of 2027, we could be staring at $5 trillion on-chain. This is the all-at-once moment. Are you positioned in the pipes or are you just watching the water? If tokenization is the fuel of the 2026 supercycle, then utility networks are the engines. While the masses are busy arguing about Bitcoin's price, the XRP ledger, XRPPL, has quietly crossed a massive psychological and financial threshold. As of today, we're seeing over $700 million in distributed asset value tied directly to the XRPL. But when you look at the represented asset value, where the ledger acts as the ultimate global bookkeeper, we've seen an explosion of 113% growth. Total assets on chain for the XRP ledger have officially surpassed the $1 billion mark. This isn't just a number, it's a proof of concept. Stablecoin market cap on the ledger is up over 20%, and the 30-day transfer volume has surged 45% to $815 million. Why is this happening on XRPPL and not elsewhere? Because efficiency is the only language institutions speak. But the XRP ledger isn't the only winner in this utility supercycle. Look at Stellar XLM. Stellar just hit a historic milestone, 1 billion in tokenized assets. They are scaling aggressively, proving that the utility trio is real and ready for the mainstream. And for those of you asking about the new guard, let's talk about Canton CC. I've had many of you ask me about my position in Canton. Yes, I hold CC. Canton is becoming a critical layer for institutional privacy and interoperability. It is a high conviction asset for those who understand that the future of finance isn't just about being public. It's about being compliant and secure. The represented value across these networks has already crossed $376 billion. We are watching the birth of a new asset class where every stock, every bond, and every piece of real estate becomes a liquid token. Retail is overlooking this because they are waiting for a pump. But the institutions, they are building the plumbing that will make the pump permanent. If you are holding these utility-based assets, you aren't just holding a coin. You are holding a share in the future of global settlement. Is your portfolio ready to handle the quadrillions? As we discuss this massive $490 billion influx of value, we have to address a serious problem that continues to haunt the crypto space. We cannot talk about the future of finance without talking about the security of assets. Recently, we've seen another wave of concern regarding data breaches coming from Global E, a third-party payment processor used by Ledger. So now, let's be intellectually honest and fair. Ledger's hardware devices are not hacked. Your private keys are still safe on the chip. However, the recurring theme of customer data leaks is unacceptable in 2026. When your name, email, and purchase history are exposed, you become a target for social engineering and sophisticated phishing attacks. So this is the friction that keeps retail investors on the sidelines. They are tired of the Wild West where one email link can wipe out a decade of savings. This is exactly why I've pivoted my strategy toward institutional-grade custody. I want to be transparent with you as I always am. I Trust Capital is a sponsor and an affiliate of this channel. I make money when you use my link. But I didn't partner with them for the money. I partnered with them because I've spent years researching their infrastructure. In a world where tokenization is scaling to trillions, you need a closed-loop system. What does that mean? It means that even if someone theoretically gained access to your account, they cannot send your XRP or ADA to an external anonymous wallet. The system only allows movements back to your verified bank account. With partnerships including Fidelity Digital Assets, Coinbase Asset Management, and even Wells Fargo and Fireblocks. This is where the big money lives. If you want full control of your keys, a decent wallet is a great choice. But if you want to sleep at night knowing your digital assets are held one-to-one off-balance sheet in a regulated environment, then the institutional path is the only way forward. We are moving away from the era of hope and pray security. As the DTCC and SWIFT move quadrillions onto the ledger, they aren't using personal hardware wallets. They are using managed, audited, and insured custody. Protect your data as fiercely as you protect your wealth. Because in this super cycle, the biggest threat isn't the bear market, it's the breach. If you want to know where the smart money is going, stop looking at the retail exchanges and start looking at the plumbing. On January 9th, 2026, a massive signal was sent to the global financial markets. SWIFT, the backbone of international payments, released a definitive briefing on why tokenization is no longer a science project. This isn't just a blog post. This is the roadmap for the global ledger. Michael Spiegel, the global head of transaction banking at Standard Chartered, and one of the key voices in the ISO 2022 migration, dropped the bombshell. He stated, and I quote, "The landscape of digital finance is at a tipping point. Tokenization and digital assets are about to move from pilot into mainstream." Do you understand what mainstream means for a bank like Standard Chartered? They were early investors in Ripple. They are using Ripple custody, and they are now confirming that ISO 2022 is the bridge that will allow Circle's USDC and Ripple's XRP to connect traditional finance with the new decentralized world. But if SWIFT is the bridge, the DTCC is the ocean. The Depository Trust and Clearing Corporation, DTCC, processes over 3.7 quadrillion in transactions every year. Let that number sink in. That's a 3 with 15 zeros. I just confirmed a partnership with the Canton Network to tokenize U.S. Treasury securities with a production environment launching in the first half of 2026. The head of digital assets at the DTCC has already hinted at moving 100 trillion onto the ledger. This is why retail is getting shaken out. They are fixated on whether XRP goes up 5 cents today, while the DTCC is preparing to move the entire U.S. Treasury market onto the blockchain. SWIFT's role is now clear to connect these fragmented tokenized networks, just like they connected fiat payment rails decades ago. We are moving into an always-on economy. 24/7 trading, instant settlement, no more T+2, no more waiting for banks to open on Monday. The pilots are over. The mainstream is here. If you aren't positioned in the assets that these giants are naming, XRP, XLM, USDC, you are just missing a trade. You are missing the rewiring of the global economy. While you are staring at the 5-minute chart trying to guess the next move of a meme coin, the titans are preparing for the everything exchange. Brian Armstrong, the CEO of Coinbase, just laid out a vision for 2026 that should make every long-term investor stop and think. He made a comparison that we cannot ignore. He reminded us of the early days of stablecoins. Back then, people asked, why do we need a digital dollar? We already have digital banking. Fast forward to today, $30 trillion in stablecoin payment volume in the last year alone. So, Armstrong predicts the exact same trajectory for the global stock market. SEAL. Imagine a world where a teenager in Argentina or a farmer in Nigeria can buy $5 worth of Tesla or Nvidia instantly without a brokerage account and trade it at 3 o'clock in the morning on a Sunday. This isn't just about trading, it's about efficiency and access. 247 global trading. The markets never sleep. Fractional ownership. You buy what you can afford, not what the share price dictates. Real-time settlement. No more waiting days for your money to clear. Programmable governance. Imagine smart contracts that only allow you to vote if you've held the stock for more than a year. Everything of value, stocks, real estate, private equity is moving onto the ledger because the legacy system is simply too slow and too expensive. But here is the danger, the retail shakeout. I am noticing more and more frustration in the comments. People are tired of the sideways movement. They are tired of the manipulation. And that is exactly what the institutions want. They want you to get bored. They want you to sell your XRP, your Stellar, and your Canton right before the production phase goes live. When the DTCC, Swift, and Coinbase are all screaming mainstream, why would you even consider walking away? This is not the time to be shaken out. This is the time to lock in. The noise on your screen is a distraction. The infrastructure being built is the destiny. Don't let the price of today cost you the wealth of tomorrow. We started this briefing with a simple phrase, slowly then all at once. The slowly part is over. As we sit here in January 2026, the silence you hear isn't the sound of a dead market. It's the sound of the great migration. The DTCC is moving. Swift is moving. Standard Chartered and Coinbase are moving. The question isn't whether tokenization will happen. It's whether you will be a participant or just a witness. Don't let the frustration of the daily candle blind you to the quadrillions of dollars moving into the plumbing. If you are holding utility, if you are positioned in the XRP ledger, in Stellar, in Canton, or in the infrastructure that secures it, then you are already ahead of 99% of the world. Subscribe and hit the notification bell because when all at once moment hits, this will be no time to catch up. The titans are ready and the infrastructure is live. The question is, are you subscribe and hit the quiet analyst BHW? Stay sharp, stay positioned.